with me here to look at the issue we are discussing today, which is centered on the Nigerian capital market. Is the CEO Cowry Asset Management Company Limited, Mr. Johnson Chukwu, and of course one of the shareholders in the exchange, the chairman, Progressive Shareholders Association of Nigeria, Mr. Boniface Okezie. Good morning, gentlemen, for joining me.
Good morning, Jimmy. Pleasure.
Right. Oh, well, was it yesterday night? We got this information that the president, of course, this is not the main issue we're talking about, but I would want you to actually comment on this. The president will tomorrow launch a commemorative 100 Naira note, you know, to mark the centenary. What is the significance? I really don't understand.
Well, you will recall that in 2008, Central Bank launched a special coin called a Cowry coin, though it was not put in circulation, to commemorate 50 years of Central Bank in Nigeria. Countries sometimes launch currency notes to mark major landmark in the history of that country. So it's not out of place that Nigeria wants to launch a commemorative 100 Naira note to mark 100 years of our nationhood. And if you recall, the government has set up a lot of processes to make Nigeria remember that it's been 100 years of nationhood, we've been 100 years of living together and staying together as an entity, and that it is something Nigerians need to celebrate irrespective of the challenges we've had as a country. So I think it's just in tandem with, there's actually a centenary city being built in Abuja, and a lot of things have been done to remind Nigerians and celebrate that we've been 100 years as a country.
So, of course, it's not out of place, because I remember in 2010 they did same with 50 Naira polymer.
Yeah, absolutely right.
Yes, to mark the Nigeria's 50
years of independence.
All right, well, let's get straight to our conversation for today. Well, that's centered on the capital market, and I'm going to start with you, Mr. Boniface Okezie. Are you satisfied with the present trend in the market right now? We've seen
are you talking about the upward or downward trend of the market?
Exactly, the movement of the market right now.
Yeah, nobody's happy, nobody's satisfied. I think it's totally loss of confidence in the capital market that we have been witnessing the downturn in the market.
Now, as a shareholder, what would you think is responsible for this?
Well, I think we can say it's investors are responsible. Not that the government is responsible. Maybe people ought to do what they ought to do, have not done it. Okay? And don't forget about it, elections around the corner. People are also having their fears. With the election, the man with violence and that, we don't have free and fair election. So that, it have not affect the investments. Some of them are selling, to finance the electoral campaign. Those who are invested. And that's why they're invested, So if you now want to go into politics, and they have to raise the needed money to do the campaign, to buy vehicles, to this and that, you have to be selling. So that also means pressure on the equity, okay? Then if the confidence is no longer there among the retail investors, what do we do to bring them back into the system? But all along, the regulator have been deceived us. That's the truth. So when you keep on happening around foreign investors, how many foreign investors do we have? Are we talking about portfolio investors who are not real investors? Because people take advantage of the market, and when they get a percentage they want here, which they cannot have their whole country, and offload, carry their portfolio and back home, So the pressure is going to mount on the same market, So that's the problem. Where the retail investors have been relegated to background, okay? Nobody recognizes them any longer. So this is a problem, because we're talking about the acquisition of banks today. You know what happened? In 2010 or thereabout, after nationalization, people invested billions into those banks in their own country. And you forcibly taking the investment away from them in the name of nationalization under the dispensation of the democracy, which cannot happen in a military era. And you want the same sort of person to come and invest in the same market that his finger have been burnt, not fault of his. He's never done anywhere in the world.
Right. Mr. Chukwu, you are an operator in the market. I mean, you've listened to Mr. Okezie here, who, of course, is a shareholder also in the market. What do you have to say?
Well, he's right in a couple of issues he just brought up. Investors' confidence was injured in 2008 when the market crashed. Retail investors have not come back to the market as aggressively as one would have expected. Several factors account for that. One is the level of disposable income. Two is the absence of credit to that market. You should recall that after the market crash, CBN put a lot of constraints in granting credit for speculative purposes. So you have not seen credit there. So you've seen that the market rallies we saw in 2012 and 2013 were principally driven by foreign portfolio investors. And foreign portfolio investors are unwinding their investment in Africa or in frontier market for several factors. One of those factors is of course, you know, formally the US has ended the quantitative easing that created a lot of cheap money that fuel injection investment in portfolio instruments in frontier markets. So that has stopped. So cheap money is no longer available. It's expected then on the local scene, internally, you also expect that Naira will have to be adjusted because you have seen price of crude drop to almost as at yesterday, it had dropped to Brent was actually $83 Brent yesterday. So, and we have also seen our own production has not moved up. We are still producing about 1.9 million barrels. So the shortfall in price has not been offset by increase in volume. So foreign portfolio investors are seeing a progressive decline in our reserve. Reserve closed about 38 points, I think 38.8 or 38.9 as at Friday, $1 million as at Friday. So it is clear that with this, if the oil price does not move up, then you're going to see an adjustment in the exchange rate. And no foreign portfolio investor will want to be caught in an adjustment in a local currency exchange rate because whatever you would have gained in terms of capital appreciation in your investment or a return on your fixed income instrument will be eroded by devaluation or exchange rate loss. So that's why you are seeing foreign portfolio investors existing at a very fast rate. And that has led, and unfortunately, local fund managers are not taking up the lap. You see the major local fund managers, the PFAs, are not yet aggressive in terms of investment in local equities. They would rather stay on the federal government bond segment of the market. So you are seeing the dumping by foreign portfolio investors without Nigerians taking up. Like I said, retail investors are not active. Other fund managers in Nigeria should have been the banks, the insurance companies, the registrars, and the trustees. They are also very weak. The insurance industry is still very weak. The banking industry has been constrained by central bank from investing in speculative instruments. So, and if you look at all these factors, you can see clearly why we're seeing a bear run in the market. But I also must make this clear. The risk of a market crash does not exist today. Because we've seen people who are saying, is the market going to crash as it crashed in 2008? There are about 5 factors that must be present before you see a market crash. And like we define a market crash,
and we don't have those factors now.
Those factors are not there.
And what are those factors?
Those factors are, one, you must have seen before a market crash will always be preceded by cheap credit going into the market. And we've not seen cheap credit going into the market. For you to borrow, you still borrow at about 22%. And the banks are not even creating credit to the market because you must create a bubble before the market crash. That's one. Two, you must have an aggressive bid by foreign capital from outside that country if you don't have a cheap credit going into a particular asset class. We are rather seeing a withdrawal of foreign capital from the equity market. The third factor is that you must see an aggressive acquisition of equities by all and sundry. And that's why Warren Buffett said that, look, when everybody becomes aggressive, you have to be timid in the equity market. But we're not seeing, and like what happened in 2007, 2008, we saw virtually everybody wanted to buy equities. 4, you must have an equity pricing mechanism that where you have a high PE multiple. That is, the price per shares must be so much higher than the earnings. So that when you divide the market price per shares, you're going to have multiples of several numbers, like 20 years, which means it will take the company about 20 years to pay you back the investment you're making if it continues to make earnings at the current level. But we're not seeing multiples, high multiples. We are seeing multiples of 10, 8%. So you don't see an overvaluation of equities. So these factors must be present before you see a market crash. And those factors are not. So there's actually no need to worry that they're going to see a market crash. You may see a sustained bear run. You may see a sustained bear run, but you're not going to see a sudden, dramatic drop in equity prices that people's values will be
in addition to what you have said, the companies are doing very well. They are putting in exchange the returns, Most throughout the year, you have seen a dividend have been declared. Even the bank you don't expect it they are declaring good dividend that could be enticing investors to go in, Like you said, liquidity, it's not there. Until we begin to readdress what issue, I think maybe those people justing for presidency now, they should come on studio, those organizing their whatever, for them, to talk and ask them about the capital market. What is their mission? What is their agenda concerning capital market? If you don't give a satisfactory answer, we should vote those people out. People must, if you're president, governor, tell us your role in the capital market, because that's the bedrock for the growth of the economy. Without the capital market, what are we talking about? So we must bring to the fore those who are justing for presidency. Let them tell us their policy as regards capital market. A lot of things went wrong did the so-called reform 2009 in the banking industry. Because for me, if you discover that things went wrong, do you follow due process? And that's what I've been, keep them backward. Because we don't do things with a lawless country as if we are lawless. No due process, we followed, adhered to. Even if you've been saddled, CBN governor, what have you, SEC regulator, what, you must follow due process. You must recourse to the law of the land. Because by the time they discover that those banks are having problems, you will get back to the shareholder, owners of those companies, to recapitalize those banks.
All right.
I have to do, government can bail out.